Hello, everyone. Welcome to NationsIndexes.com. We're the world's leading independent developer of volatility and option cost indexes. We created our suite of indexes to help you quantify what has been subjective, to allow you to trade with data, not just a hunch, to recognize trading opportunities that were hidden before, to create superior trade structures, and finally, to help you become a better, more profitable trader. Let's find out how we can do that, and be certain to stick around to the end of the video to see exactly how one of our most important volatility metrics compares in the three most important domestic equity indexes. Nations Indexes introduced the idea of deconstructing Skew to understand what an option market is really trying to tell us. The option skew is the graphical representation of implied volatility of all the options listed in a single expiration. This is an example of an option skew. This example is typical of equity index option skew. The options at each strike price exhibit different implied volatilities. This difference accounts for some of the vagaries in the option market, including the idea that markets aren't continuous, but rather exhibit jumps. Smart traders use this skew to their advantage, and our indexes can help you do just that. Why is it important to deconstruct skew? The answer is simple. It's because every trader sees the same prices, but it's only by looking at those prices differently that you'll get more information and insight than other traders. But this is what makes our indexes unique. We don't just give you more information, we give you more insight. Every successful trader needs an edge, and the insight we can provide can be your edge. As we say, let information be your edge. What do we mean when we say we deconstruct skew? And how is this possible? Let's find out. At Nations Indexes, we begin by looking at the four important regions of the equity index option skew. The first of those four regions is made up of at-the-money options, which are those options with strike prices which are very near the current price of the underlying asset. Nations VolDex measures the cost of options in this region. The second region is out-of-the-money puts, which are those puts with strike prices which are below but not too far below the current price of the underlying asset or index. These are the options that traders might use to express bearish sentiment, or that an investor might use to hedge downside exposure. Nations PutDex measures the normalized cost of these options. The third region is deep out-of-the-money puts, like those used to protect a portfolio from a tail event. These options are very unlikely to be in the money at option expiration, but they're an important barometer of fear or concern on the part of investors. Nations TailDex measures the cost of these options. The last region is out-of-the-money call options. These are the call options with strike prices, which are above, but not too far above the current price level of the underlying asset or index. Nations CallDex measures the normalized price of these options, and it offers a window into the degree of bullishness of the broad market. A fifth potential region might be deep out-of-the-money call options, but in the equity index option world, they tend to be extremely cheap and are not particularly important. You'll note that while we're deconstructing skew, we still manage to cover the vast majority of the option skew and all the important parts of it, while also distilling unique insight. You wanted to know what traders and hedgers were doing in out-of-the-money put options? Now you can know. Before Nations Indexes created its suite of volatility indexes, the only measure you had was VIX. But VIX uses nearly every out-of-the-money option listed, and incorporates all those inputs into a single value without any transparency regarding what particular options or portions of the option skew are doing. That's like having a market with a broad range of stocks, but only being able to see a single value, maybe the level of the S&P 500, instead of knowing what individual stocks and sectors are doing. You wouldn't put up with that, would you? Then why put up with it from your volatility index? One problem that every option trader has is a lack of consistent, objective insight into how an option market is changing and which specific options, or range of the option skew, are being bought and which are being sold. And let's face it, if traders are focused on buying puts, or a range of the put skew, that's something you as a trader would like to know because it transmits specific information. If they're buying calls instead, that transmits very different information. It is never possible to know exactly what a trader's motivation is or how a trade fits into their overall position. But with the right tools, it's possible to know how their trading is impacting the market and to take advantage of it. As we were discussing the idea of deconstructing skew, we wondered how we might learn what traders and hedgers are doing in out-of-the-money puts as an example. Nations PutDex is the answer to that question. Since you now have an objective, consistent measure of the cost of out-of-the-money puts, you have more insight. Let's learn about the Nations PutDex index. PutDex measures the normalized price of put options, which are one standard deviation out of the money. That translates to a put option with a delta of approximately -16. So these are the sort of options speculators might buy to express a bearish point of view or that an investor might buy as a hedge against a market decline. That constant delta, what many traders call moneyness, means PutDex always maintains its context. The tenor of the standard version of PutDex is 30 days as it is for our other indexes, but we also calculate a 7-day version for those times when an important catalyst is looming, and to help traders who prefer shorter-dated contracts. And again, as with all our indexes, the standard deviation threshold is calculated using current at-the-money option prices rather than stale historical data, which is probably no longer relevant. You're probably wondering how PutDex is calculated. Let's find out. As you can see, we begin the calculation of PutDex as we do with both CallDex and TailDex. The first step is to use up to the second bid and ask prices in at-the-money options to calculate the PutDex threshold. The threshold calculated using these options is the price level that is exactly one standard deviation below the current forward price calculated using put-call parity. This means PutDex remains relevant since it never uses stale historical index levels to calculate the put threshold. Can you imagine if your volatility index tried to use closing prices from the past 52 weeks to calculate standard deviation? If the market had been very quiet during the past year, but has since become very volatile, that data would be irrelevant. You'd have an index that didn't remotely describe the current environment. But since PutDex uses current option prices, it's always relevant. See, you can already trust PutDex to provide unique insight, and remember that PutDex exhibits consistent moneyness. The next step in calculating PutDex is to use prices of the put options just above and just below this threshold, these options here, to calculate a normalized 30-day put option price. Since you now have a dependable index with understandable context, you are trading with greater insight. For too long, option traders have been forced to guess or trust their memory regarding how expensive put options are. You can probably think of a time when an objective measure would have been more helpful than a subjective guess. Subjective data won't help you become a better trader. Trading by relying on subjective data is no better than relying on a hunch or a guess. Is that really the way you want to trade? What you need is real, objective data, like we can provide at NationsIndexes.com. One example of the advantage of simple objective data is easy to understand. Do you need to wear a coat when you go outside? Hearing someone say it's kind of cold outside isn't much help, is it? That's subjective data that doesn't give you any insight. But knowing the objective temperature is a better way to make the decision. The same is true for our objective measures of option prices, and there are other advantages as well. The objective measure of PutDex means you can compare it from one underlying asset to another and consider relative value trades which take advantage of what used to be impossible to see. Let's look at some PutDex index values to see how they compare across three important domestic equity indexes since the beginning of 2022. The first thing you'll notice is that PutDex on the S&P 500 is generally lower than it is for either the Russell 2000 or the NASDAQ 100. That makes sense, because the S&P generally displays less realized volatility than either of those other indexes. Less realized volatility leads to lower option prices. Another important lesson is that these three flavors of PutDex rarely show significant divergence. They tend to move together and maintain the relative relationship. Now please watch our video describing CallDex. In that video, we do the same comparison for CallDex. And there are several important periods when CallDex on these three underlyings shows significant divergence from each other. That means traders who have the unique insight we offer can use PutDex and CallDex together to craft superior trades that take advantage of these relationships and any divergence. As we say at NationsIndexes, let information be your edge. Here, you can see important historical statistics for PutDex. This will provide context and help you trade with data, not intuition or hunches. No more saying to yourself, that seems high or that seems low. Now you'll know, and you'll be able to use that information to create trade ideas. And at NationsIndexes, we calculate PutDex on a wide array of underlyings and make those index values available to you so you gain insight into equity indexes, treasury bonds, Bitcoin, precious metals, and the most dynamic stocks in the American stock market. Many traders like to use PutDex to fine-tune protective strategies. This is possible because we quantify what used to be hidden from you to make you a better trader. NationsIndexes. Better ideas, better indexes.